manual checks and balances. They're using 2 to 4 page checklists to quality control every single appraisal report that's written. And then the data that's in the appraisal, they have no way of getting it into their system. So they either manually have to rekey it or they don't even do it. So we streamline all that. We connect all the different software programs that they use and the other participants use to get the data back and forth to all the players. So we actually make them more efficient. They can review 200% more, like 3 times the reports with the same office staff. And then
so let me just kind of jump in this in here for you. So you actually have a really great idea of what's happening nationally.
Well, that's what I was going to get to. So the other thing that we do for mortgage sales teams is we get the appraisal done for them. We act as like a marketplace, and we do that across the country. So in every province, in every territory, we supply appraisal reports for mortgage sales teams and their end customer, who happens to be your customers as well, because as you're in real estate, if people are getting a mortgage, they're your clients too.
Right. And what's really cool about this webinar, it's so timely. You were just interviewed by the Globe and Mail on this whole idea around appraisal. So the participants today and people who are watching this video have a little glimpse into what this article is going to be about. So consider you guys are lucky. So maybe tell me a little bit about some of the trends and you're seeing right now. I know that you were talking about like
sure,
tell me go ahead, Chris.
Sure. So we've noticed a few things. I asked our customer success team what are some of the trends that they're seeing, and they told me there's a few things. One, market rents are being requested on a higher percentage of appraisal orders than ever before, and what that means is the appraiser is having to provide a estimate or an opinion of what a unit will rent for. So if it's a duplex, they'd have to tell you what each unit should be renting for given the market.
Yeah, and I know we've requested some appraisals with market rents, and typically, market rents are required when there's not a lease in place. But I'm starting to find out that even though there's a lease in place, we're still required on let's just say on a subject property that has a rental unit to get market rents, even if there's a lease, or even if somebody's buying a rental property. So maybe share some insight into what you're seeing.
Well, there's probably a number of reasons why this is the case. So if I think back to maybe 20 years ago, 15 years ago, when a mortgage specialist or a broker had to validate the rent, all they had to provide was a lease agreement. And I think there were some unscrupulous brokers out there where either they tell their customer to tell a fib or whatever, just to get the rent to the right number to make the deal go from an affordability standpoint. But today, the lenders are asking the appraiser to provide that, and they're asking, I think, partially because of that, but also they want to back up what's on the lease that Sandra, you're providing for your client. Mm-hmm. And lastly, the other reason why I think it's happening more often than ever before is because affordability is a problem for the average homeowner, and one of the only ways for them to buy a house, if you think about the GTA or even in Guelph, where the average sale price has gone up a fair chunk, the only way for a lot of people to afford a home is to have a basement rental unit. And the lenders are asking the appraiser for that opinion of rent.
Yeah, so it's not just, for what we're seeing in our office, it's not just affordability, it has to do with qualifying. So just, so if
that's kind of what I'm driving at. Like affordability to me means you got to show the lender that you can qualify, you can afford it. So I feel like we're saying the same thing.
Yeah, and qualifying now is even harder than before. So I want to just remind the realtors that are joining us, like the rules are, it was the Bank of Canada stress test rate, which is 5.25%, or the contract rate +2. So like right now on a 5-year fixed rate mortgage, for example, we're looking on a 30-year amortization, we're looking at a rate of 4.5%. So if it's one or the other, most people now, if they're choosing a 5-year fixed rate mortgage, have to qualify on a rate of the contract rate, which is 4.5 +2, which is 6.5%. That's a new stress test rate. So kind of while we're on the topic of qualifying and affordability and this idea of the market rents, helping them with like a mortgage helper, it's also more difficult to qualify. And so for those people for those realtors who have buyers, one of the things you want to make sure you do is if they've been pre-approved, even in the last 30 days, most institutions now are only holding rates for 30 days. And so you may have a buyer that has to get multiple pre-approvals because that qualifying rate, if they're choosing a fixed rate mortgage, it is changing.
Yeah.
Right.
Interesting.
Yeah.
One thing related to this that I want
Yes.
to point out is related to non-legal units, the appraisal rental units. The Appraisal Institute of Canada has given their members direction that they're not to provide a market rent analysis when the units are not legal. And I believe it's because they want to lower their risk. They want to lower the errors and omissions insurance premiums because they are actually quite high. You can imagine when you get sued, if the mortgage, if the deal goes the wrong way, people stop paying, they don't get the unit rented out or whatever it is, and they default, and then there's a $20,000 or $50,000 loss. That's got to get paid by the insurance company or the appraiser, depending on, but somebody's got to pay, is the point.
Yeah, it's very good information. I want to be careful of the time and make sure that we cover all of the really interesting information that you have. But I wanted to kind of tackle this thing about, like we're always super careful with our clients who are going in with an offer that has no conditions. And I know that almost in 90% of the time, an appraisal is required, especially if the borrower has 20% down or more. And I'd say the vast majority of the borrowers that we're working with have at least 20% down, either from the sale of their home through the equity, or a lot of first-time homebuyers are getting significant gifts. So you're seeing a huge transfer of wealth. And I always caution them, and I kind of go through the scenario. Well, the lender is going to give you a valuation based on the purchase price or the appraised value, whatever's less. Right. And so can you maybe talk a little bit about valuations and what you're seeing and some of the watch outs for realtors, because that's what they're really interested in.
Sure. That one of the themes that our team noticed was the amount of appraisals coming in below, with an estimated value below the purchase price. And that could be, just a matter of the market was really hot, rates were still low, people were trying to get in before the rates went up. Some people have theorized it has to do with a blind bid system. Other people will say, well, in an open bid system, you can get the same thing. All I can tell you is we have seen an increase in that. Prices have softened, and a little, not a lot, like a percent or two.
And this could be problematic for people maybe who have sort of overpaid earlier this year and are just closing now in the next couple of months.
Well, and it's a problem if it's more so a problem. I'll say there are some mortgage specialists who don't order the appraisal right away when when they got.
I know, because I get the call 2 weeks before closing
Right.
when there's a problem
Yeah,
with the appraisal.
Right, my deal's blowing up. What do I do? Whatever. So I think it's important that your customers that are with you on the call right now know in the past, like I'm talking 10, 20 years ago, appraisers tended to look at the actual sales. So if a deal closed, they used that as a comparable property in their analysis for the subject property, for the appraisal they're doing on the subject. Today, they're looking at the firm deals and the closed. So more weight is given to something that is more recent. So if a property sold yesterday and it's a good comparable property and it's sold maybe under the list or at a value comparatively that's lower than what happened for the subject property a month or two ago, they're going to use that even if it hasn't closed yet, because that is the best indicator of what's happening in the market today. So it's really important, if you've got a firm sale and you're a realtor, you make sure that your mortgage people get the appraisal ordered immediately.
Yeah.
Immediately, because that's the market you're in.
Yeah.
If you wait, you run the risk of values going down. Even a couple of percent could cause your borrower to have to put in more than they anticipated in, at the beginning.
Yeah, and I know I tell customers, like, we hate surprises more than they do. So one of the things that we're, for the realtors who are joining us and watching this, like, we run a purview report. And then what we're asking realtors to do is to do a CMA, and we marry that just to see if there's going to be any, there's going to be any indication.
Like
Yeah. And I mean, it's not foolproof, because purviews, as you know, don't replace appraisals. But that's one of the things for realtors, like when we ask you to do a CMA on the property, we really mean it, right? Because if you
need the info, it's actually important. That's unique in the marketplace. I've not heard of a lot. I actually haven't heard of a broker doing that. I didn't know you did that. That's a really good thing, because one of the other things I want to mention is that with the values coming in light, then people dispute it. Either the broker will dispute it, or the mortgage specialist for the bank will dispute it, and the real estate agent will dispute it. They'll just say, no, that's wrong. What I want to tell you folks is that if you can supply your mortgage professional with good comparables to help arm them, so they can go back to the appraiser if the value comes in light with some good information, then the appraiser will give you the time of day. They will hear you out. Or if you're dealing with a company like ours, we will take that information and go back to the appraiser with it. But if you come to us and say, hey, that value is wrong, we're going to ask you for the information that makes you think that.
Yeah, so it's almost kind of like, it's like heading it at the pass.
If you don't give us anything, what are we going to say to the appraiser?
Exactly.
They're going to say, well, give me, like, don't just tell me I'm wrong. Give me some information.
I know. And this is so important for the realtors who are part of this conversation. Now, I also want to be cognizant of the time. I think we're going to spend maybe another few minutes, but I wanted to talk a little bit about alternative financing, because what we're seeing in our office, just because of the qualification guidelines, there's more and more people who are self-employed, showing, self-employed people tend to have show less taxable income than T4 employees, and that sometimes hurts their ability to qualify, like for a regular prime mortgage. And we're doing a lot more mortgages with alternative lenders. I'd probably say about 35% of our files are with alternative lending, because we do mortgages for credit unions, mortgage investment companies, and I wanted to. And those lenders are more focused on the collateral.
On the property.
Right, on the property, yeah. And so I just want to let you know, 100% right across the board. If you know that your borrower or your buyer is doing alternative financing, and if they're working with us, we will let you know. They're going to need an appraisal on the property. So maybe talk a little bit about alternative financing, because it's becoming more and more common because of the need for extended ratios.
Well, I won't talk to alternative financing, but I'll talk about the appraisers that are called upon when it's an Alt-A or I'll call it a B deal.
Yeah, good.
So those appraisers tend to be the ones that have been around for 20 plus years, often 30 plus years in the industry. They're very well respected by the lenders because of their experience, and they don't like to, what's the best way to put this, they don't take a lot of flack. They're very opinionated,
Right.
and they have no problem
because they've earned their stripes, right?
Right, that's right. And they do not like to deal with appraisal management companies. Now, we don't classify ourselves as an appraisal management company per se. We do that. That's one of our services because we arrange the appraisals across the country.
Yeah.
More than that, but they will flat out turn those deals down all day long if they're getting the assignment from Solidify or Nationwide Appraisals or one of those appraisal management companies.
Yeah. So what you're doing right now is just kind of giving us a glimpse behind the curtain.
Well, what I want you to know is,
yeah,
what ends up happening, the deal bounces around. Nobody picks up the deal because they're not being offered enough money, and your appraisal might get delayed because that person who's been around for 35 years will not do that appraisal report for $250 or $300.
Right.
They want more money, and they're not going to do that job to 80% for home trust if it comes from an AMC like F&F or
yeah. Now the realtors may not know all of these terms, so just keep going here and bring it home, Chris.
The thing that's most frustrating for you as a mortgage specialist and then the real estate professionals is when the quote is given to your client what it's going to cost, and then nobody picks up the deal, everybody demands more money, and then you have to go back to your customer and ask them for an extra $200. That really frustrates people. They feel like they're getting nickeled and dimed. So that happens. That's one of the reasons why we started the business here, actually. But I just think it's important for your realtors on the call to know that if the financing does have to go through an alternative lender, there's a strong likelihood that the appraisal could take a couple more, up to 5 days more than it normally would, because those appraisers are in very high demand. There's very few of them compared to the demand. So the supply is smaller.
Yeah.
Just like real estate prices, right? They go up because the demand is high, the supply is low.
Yeah.
Same thing with these appraisers. So just be aware of that the cost for the appraisal is often higher and the turnaround time can be a little longer.
Right.
So it's just good to know. And again, like the one thing that people don't know about a B deal, the scope of the work is a lot more difficult.
Exactly. So sometimes depending on where I'm doing the financing, because it's not going to necessarily be in Guelph. It's going to usually my territory is like Guelph and about 30 kilometers out. I have done some mortgages where people are moving out of province, and I'm certainly happy to do those on a referral only basis. But what I'm finding is that like getting an appraiser, a local appraiser, is sometimes tricky, and
it's even harder if you're going out of town.
Yeah, exactly.
And that's a different thing that I could talk about, where I want your audience to know, or our audience to know, is the scope of work for a B lender is more stringent than for a AAA lender. So an example is Scotiabank will allow comparable sales in the appraisal report that are as old as 6 months.
Okay.
And they can be, I think it's 5 kilometers away, up to 5 kilometers away from the subject property. Well, in Guelph, for example, that's pretty much the whole city,
Yeah,
or
exactly.
most of
Yeah.
the city, right? For home trust or other, I'll call it a B lender, the comps can only be 30 days old or 45 days old, and they can only be 1.5 kilometers away, up to 1 kilometer away, let's just say. So that's an example of how now the work is a lot harder because the appraisers like they have to be a lot more specific. And then of course the adjustments that they're allowed to make, they can't exceed 10% with Scotiabank, for example. I think it's or some of the I won't say it's Scotiabank per se. It's with some of the AAA lenders, the adjustments can work out to like 20%.
Right.
From the purchase price. So the work,
there's a lot less flexibility with alternative financing. Yeah.
way less.
And it's more granular. And I have had issues come up where it's alternative financing. So there's, something wrong with the customer's income qualification or the debt ratios. And now they're buying a property that is like, let's just say a B property or has some issues with it. We always want to make sure we get an appraisal up front to make sure that we understand what the collateral consequence will be or the property. Now, just to wrap up, Chris, I know you're really into values and stuff like that. And, we have heard you're really into home values. Really? Now, and I think we had a quick conversation before just to prepare for today's webinar. Maybe kind of give us an insight into what you're seeing in the market and sort of changes in the valuation and what we can expect for the future.
Thanks, Sandy. I guess the thing I'd leave you with is it's important to do as much reading as you can and be a student of the industry. So I try to read as many economic papers as I can to give me a better feel for where are things headed. And there's a really interesting paper that just came out in the last month, and I'll send a copy to you later today, Sandra, so you can
share it. Yeah, that'd be great.
One of the things in this paper specifically is that it appears, based on a bunch of different things that are in this report, that real estate values, like hard asset values, are poised to just keep going for another decade.
Right.
And so we'll see more inflation. We'll see some wage growth.
Yeah.
And there's lots of great reasons for it. But like, perfect example is Canada is trying to increase its immigration by 430,000 people a year. 430,000 people a year. So over 10 years, it's like 4.5 million people roughly.
Yeah.
If you simply divide that by a household of 3 people, that's 1.5 million units of housing stock that are needed. And Ontario, by all measures, is short 1.7 million units already. So across Canada, we're short 1.9. It looks like if we don't do anything about the housing stock, we're going to be like 3.5 million units short of housing stock. Well, what does that do for prices? If the supply is low and the demand is consistent, the prices have to go up. If demand drops, that's another story. But it doesn't appear that demand is going to drop because most people that come here, they have money.
Yeah, and I know
they want to own a home. That's one of their dreams.
Well, exactly, and like I know when we're doing a new to Canada mortgage, like there are just some excellent programs through the default insurance providers. Like even with a valid work visa, you can qualify for a mortgage, and we see a lot of people coming because most of those people who are immigrating to Canada, they have some specific skills that are required. So that is we just love helping you Canadians find homes and do mortgages. And if language is a barrier, Chris, we often, because the way we're meeting customers, we can meet with like a child that might, like a adult child that might know English better,
Right.
right?
Or they have family in another country that also speaks English.
And it's, yeah, it's so awesome, yeah, that we're meeting people online, because it just opens so many doors for new Canadians about, like, again, if English is not their first language, they can always bring in somebody who can help them with that appointment. So Chris, it's always a pleasure talking to you.
Thank you.
And your
Likewise.
expertise. Thank you so much, everyone, for joining us today. I will follow up with my contact information. And if you do have any questions, you can always reach out to me and schedule an appointment.
And Sandra, thanks for inviting me. I'm happy to help, and I'll make sure you get that document, that report. So anybody on the call that would like a copy, just reach out to Sandra. She'll get it to you.
Okay. Have a good day, Chris. Thanks so much. Okay. Bye-bye.
Bye.